Hey guys, Mike here. So what an interesting day in the market when you got the Dow leading the market. And it's like Kathy would have said, it's not your grandpa's Dow. It's changed a lot. Just look at the stocks, okay, in the Dow. But you'll see IWM, Russell 2000 that is, green. What I always tell you to check when the Russell goes up like that, and you don't see the Qs falling, and the SPY did okay today. But what do you want to check? Regional banks. Why were banks up today? We're going to talk about that. Something important came out last night from the Fed and stuff about that. You might have noticed yields jump. Why did yields jump? I'm going to talk about that as well. And more importantly, and the thing you don't want to miss, we're going to talk about the second half of the year and what you should be expecting, okay? Because tomorrow, obviously the 30th, so we're going to be going into July next week, second half of the year, which is really important. So we're finishing up all the window dressing and all the fund managers shaking and baking and making moves, right? Okay. And so you might have noticed, as I said, the yield right here, you can see on the far right, the 2-year Treasury note. See that big old spike over there? Yeah, spiked up today, and it's like, wait a minute, what in the heck happened? Well, what happened was GDP for the first quarter got revised up from 1.3 to 2%, but also initial jobless claims came in less than what was expecting, okay? And so that's important. You can see over here, this was a good chart, but you can see pre-pandemic average versus what we've been getting. It's been going up, and people are like, hey, cool. And then it dropped today. So, of course, the market kind of flips out a little bit about the GDP and that. And it's important to notice, this is an even better view of it. You can see the initial jobless claims, right, or what people are going on unemployment, are still going up, right? That is still happening. What do you see happening with continuous jobless claims? They are still heading down, which is not what the Fed wants to see, because that means those people are finding jobs and they're not continuing to file for unemployment, right? Now, might have noticed XLF has been getting beat down like it stole something. All of a sudden, it's the leader today, right? But then, of course, you had industrials, materials, things like that, pulling up. Even energy got some love today. Again, looking at all the big banks, some of them up big, some of them up slight. Regional banks, they all went up too. And, of course, what came out last night? Well, come to find out, there was a stress test done. 23 largest banks passed, right? And you might be wondering, what is this stress test they're talking about? Well, what they did is they supposedly ran a scenario where we had a severe global recession that caused a 40% decline in commercial real estate prices and a substantial increase in office vacancies, as well as a 38% decline in home prices. Under the Fed's worst scenario, the unemployment rate would rise to 10%. It's currently 3.7%. And supposedly, these banks passed it. Now, I want you to keep in mind, this was the 23 largest banks. We have like 4,000 banks, right? And who holds like 80% of the commercial loans, as far as I know? It's regional banks, okay? Maybe that's one of the reasons you see this right here. This is prime book loans versus the short ratio, right, from these big firms. You can see U.S. banks versus U.S. regional banks. Don't matter which one it is. I mean, the bearishness is insane, right? I mean, look at this. 2023 is still going into more shorts than longs. And then you can see it's been declining, obviously, dramatically since mid-2022, because the other reason is, why? Rates might continue to go up, which are not good for these banks. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And it could just be me, but I mean, it's great they passed the test, but I mean, it's 23 banks. And I guess maybe the top 23 are all that matters, even though there's like, was it 4,800 or something like that out there? And since they were, I just say that because they were stressing the whole thing about commercial real estate. Well, who holds most of the commercial real estate? It's the regional banks, the smaller regional banks. That's why they're all trying to offload them like crazy and get people to buy it off their books, because that's what's causing all the problems with them. So I guess, I don't know, I don't like to see, all of them stress tests to see how many would actually fail. That would have been nice to see. From what I said, though, I guess, as long as it's the top 23, that's all that matters. So let me know what you think about that down there in the comments. But now what I want to talk about is, one, what are we expecting for July? I'm going to show you how the S&P actually usually does here. And then the second half of the year, this is the part you really want to see here, okay? And, understand the SPY, which follows the S&P, obviously. You can see July performance, and it's actually really good. I mean, and if you just go looking at July from 2014 on, man, July's good. And I even read, I think the Qs have never had a red July. And so, keep that in mind for July. That don't mean when I say red, that don't mean, or, green, that don't mean it can't be just 1% or something. Now, for the second half of the year, we'll get both the SPY and the Q. So, and of course, this is going to show us when the S&P 500 returns at least 10% in the first half of the year. And when that happens, and all I really care about is what's going on in the 21st century, right? Or even you can count the 90s if you want to. But when it does, you can see the right there. They're all positive. I mean, going back to 1988, really. I mean, but I just really care about the 2000s because this is when algos took over, options, that kind of stuff, you know. And then when you look at the NASDAQ, I'm going to zoom in on this for you, but it says NASDAQ strength tends to wane after a bumping first half of the year, which this is totally stupid, by the way, because that's why I'm going to zoom on this and let you see this. Because remember, the NASDAQ's up huge, right? And when you see the first half return versus the second half return, if we go through here, you can see where we're at now. Obviously, it's been a big move so far. Obviously, big loss last year, but I just want to draw a line here and say, okay, let's say over 20%. What happens? That's really what I want to focus at because that'll narrow it down a great deal and stuff. But you can see that was a 20% year. End up having about a 10% return in the second half of the year. So it's not a loss or anything. We're still having returns. It just didn't match the first half of the year. Okay, you know, when you come over, the next one's gonna be in 2003. You can see we even had a better year. That was actually the bottoming of the dot-com bubble. It was March of 03. We bottomed right there. So that would explain that a little bit more. Over in the 90s, you can see that was another bottoming right there, but a huge second half of the year. But if you keep going through this, you'll see, yeah, we had over 20% in the first half of the year. There were still gains, and they seem to be above, you know, 10% for the most part. There's a few back in the 80s where you see it was negative, so that could happen. But just going from like 2000 or 19, let's say 1999 up, when you had 20% in a year or even close to it, you actually did have some pretty good second halves of the year. And so if you look at that, and so also keep this in mind, while I said this chart to me was kind of stupid, they said it wanes. Of course it wanes. I mean, guys, look at where we're at right here. We have gone up 32% from January 3rd to today. 32% in a major index in just 6 months. So yeah, if we return 16%, even half that, you know, or even 10%, that's still like, that would make it 42% for the year if it's just 10% in the second half of the year, which means it's going to be, you know, relatively kind of flat up and down for that to happen. But I mean, good Lord, I mean, you normally in 2020 expected, you know, major returns, but I mean, in a normal year, you're not going to be expecting 50, 60% returns on a major index, right? And so if that happens, great. And again, so just keep that in mind. That's where we're heading for the second half of the year. Now, in order for this to happen on basically the whole stock market, you need more breadth, right? So we need small caps, right? Terrible economic environment, small caps right now. But you can see 3 days in a row green. Stopped when they hit this volume node right here, but it, you know, blew right up through this volume gap right here, kept it above the 200. And so again, 189 is the magic number. Okay, that's going to put it above its all-time high anchor VWAP. We're trying to push through that, and so keep that in mind. And it's got to get past that volume node right there. But if it does, we'll see what happens when we finally get to 189. If they keep raising rates, it's going to make the environment even worse for small caps. So that's just something to keep in mind on that. But when you look at it, it's like we talked about. Where are we at? We're at extreme levels, right? IWM versus the SPY. It popped up when we hit these extreme levels, and I pointed out, it came right back down into it. Normally, when you hit these levels, especially when they're extreme like this, you tend to get a good performance or at least some kind of reversal on this, okay? Because it tends to trigger algos and everything else, and people go, oh, these are undervalued, right? And then, of course, I showed you IWM versus the Qs, and right there's when I showed it to you. We did the pop. Boom, came right back down, sold right back off, and it couldn't make it above and close above 189. But again, this is a all-time new low right here in this ratio. So, you know, we'll see if they continue to get some love or not. You know, Tesla, obviously, quiet day, up slightly green. But again, we talked about it. Most of that big pops, that's pre-market. But this is actually trading hours for regular folks. And if you look right here, stays right on that volume node where it needs to stay. Again, we didn't want to fall down because then we fall right into a volume gap. And this one's going to move quick. When it gets in these volume gaps, it moves quick. And when you look at this, it's literally a 50-50 crapshoot. If the SPY or the Qs especially go green, tech goes green, Tesla's going green, right? It's just as simple as that. That's unless something crazy happens, you know. And so that's kind of when you look at this, I think you see right there, you know, how fast it can move up or down, but it's just depending on where the whole market goes at this point in time. And they got good news out today. I mean, 3 pieces of good news, right? Volvo just became the latest EV maker to move to Tesla's charging standards. And then after that, here comes Volkswagen. Volkswagen comes out and says, yep, they're in discussions to move over there, and Volkswagen has its own charging stations and stuff. They call it Electrify America, and these are in Canada and America, just FYI. And then, of course, after that, here comes Polestar. They're going to adopt Tesla's connectors as well, following their parent company Volvo. Of course, I just showed you. And as far as economic news tomorrow, you're going to have core PCE price index month over month, so that's important. Personal income month over month, and then you'll have personal spending month over month. So, you know, this is before market opens. So, yes, I expect to see some kind of movement in the market when this happens, but also understand this: the second day prior to 4th of July, which is next week, I'm talking about 2 trading days prior to the 4th of July, is usually one of the greenest days there is. It's usually green. Okay, so keep that in mind. I don't mean it's going to go straight up all day. You can see I've looked back in the past over the last 4 or 5 years, and you see a drop in the morning, then it goes up, another drop, then it goes up. So it could be very volatile, but usually it is green, and actually the day before, I believe, as well. So 4th of July. So just keep that in mind, because remember, next week we will have a short week with the holiday falling and stuff. I believe 4th of July is Tuesday, if I'm not mistaken. So just keep that in mind, guys. Obviously, weekly options expiration tomorrow as well. And so, you know, we'll see what happens on that. Let me know what you think about the bank news that came out, and what's going on with tech in general. And do you think, hey, what's your prediction? Second half of the year, what do you got? Right, so I want July predictions, and I want second half of the year predictions, okay? So hope you got something out of it, guys. Hit that like and subscribe button if you did. Really appreciate all you guys. Been a good first half of the year. Let's make the second half even better, all right? See you later.